Thanks for joining us today on Market Call. I'm Morella Fernandez. Kim Bolton with us on the show, President and Portfolio Manager at Black Swan Dexteritas. He'll take your questions on technology stocks, and I'm sure you have a lot of them today. Here's how to reach us. 1-855-326-6266. You can email your questions as well. marketcall@bnnbloomberg.ca. Good to see you.
Good to see you.
What a beating the tech stocks are taking. They were reporting earnings, and even with Alphabet, parent company of Google, which did almost $100 billion in its latest quarter, down. CapEx is still on everyone's mind? Yes?
Yes. You know, it's taken a beating, but it's really sort of been in a range. It broke the lower part of the range this morning a bit. So, you know, in futures terms, NASDAQ has sort of fluctuated between 24,700 all the way up to 26,300. And so you can actually sort of play that range until this morning, and it actually got down to 24,550. You know, just sort of under the support level, but it's sort of come back right now. I'm not that surprised.
Why?
It's a year of transition. You know, it's a year of transition on the macro side with a new Fed chairman. Mm-hmm. So everyone's sort of wondering which way he's going to sort of tilt. Secondly, it's a big transition year. You know, we spent the last 3 years building out the infrastructure for this AI revolution. Now they got to sell it, and people got to buy it, and people have to make money out of it. So it's a big deal. And so, you know, the transition is now going to go from, you know, a technology story to what we, you know, an earnings story. So, you know, these infrastructure players, they need to sell their large language models and all the tools that go with it, with the agents and so on, to enterprises. And then everyone's sort of waiting to see how that's going to pan out. You know, if you look at some of the big industrial, healthcare, even entertainment companies, the financials, they are engaging and employing AI. You can see it with their agents.
So that being said, you're saying that it's moved on, right? The storyline has moved on to where it's being employed. Have you abandoned any of the Mag 7 as a result?
No. You know, like with the Mag 7, we probably had anywhere between 5 and 10% holdings across the separately managed accounts and also through the funds. We've taken a little bit of money, and it's sort of come down to sort of 5 to 7, 8%. Okay. So we've taken that money and actually put it into those industrials, those financial companies that we know are using AI, the healthcare companies. So it's different for us compared to the last 3 years, but I think it's the right way to go.
I'm sure you're going to get a lot of callers who want to know, do you think the big stocks are going to come back? They're so off now and have been going that way for several months. Are they going to come back? What do you say?
Well, I say I was hoping this was going to happen because we didn't have enough of those memory stocks. You know, we didn't have enough of the SK Hynix and the Micron and the SanDisk. But this gives you an opportunity to sort of return to the scene of the accident and actually pick those up.
Okay, let's take a quick break then. We will be back with the first phone calls and emails for Kim Bolton of Black Swan Dexteritas. He's taking your questions on technology stocks. Back in a moment. Let's start with an email from Jody. She says, your thoughts on Micron technology, please. What do you think about Micron?
Oh, we were just talking about that.
Good time to pick it up?
Yeah, exactly. Because I think it got over 450 and now it's down around 375, 380, 85. It would be nice if you could actually get it down a little lower. We bought a little bit this morning. I think right around that sort of 380 level. So they are America's largest DRAM, NAND, and the high bandwidth memory products, which, that whole business was very cyclical, and you've probably heard it before, but with the AI revolution and the demand for the memory and so on, this is absolutely taken off, and it's sort of taken it away from a sort of boom and bust cycle that these memory guys have. Currently, I think it's around 380-ish.
384, yeah, 385.
Interestingly, the average analyst out there has a 12-month price target of 376 right here.
Okay.
And so people are sort of waiting to rejig their numbers in here. They just reported for their first quarter of 2026. They blew the doors off. So I think, the high is 450. It's probably a good time for digestion in here. But you do have some analysts out there that are saying 500, 550. So This is a great place to actually pick up a third, maybe pick up another third down around 325. And if you ever get it under 300, it'll be a bargain.
Okay. Let's go to the phone lines then. Ray is on the line. He's in Pickering, Ontario with a question. Hi, Ray.
Yeah, hello. Thank you for taking my call. Kim, I've for my tax-free savings account this year, I've been watching Cisco, and it's looking like it's being treated a little differently than the Mag 7, as it's been kind of going up. And as you know, it's been a dormant stock for the last decade and a half. Just wondering if you think it's a good time to get in here, as it looks like maybe people are moving money out of the Mag 7 towards Cisco. And as you know, we got the big data center build-outs coming and a lot of capital spend going that way. And, Cisco Systems has those devices for those type of environments.
Okay. Thank you for the question. What do you think about Cisco first?
Thanks, Ray. Arista, the symbol ANET, and actually the guys that started Arista 10 or 12 years ago came from Cisco. And so they didn't have, the legacy stuff that Cisco had. And so a lot of the switches, the routers, and so on that are needed in the data centers, Arista sort of picked up the slack from Cisco. However, Ray, it hasn't done too badly. It was sort of, you're right, it was dormant for a while, but then it started to pick up. Currently trading Cisco right around that sort of 81, 82 level. 12-month price target for this switching router and wireless company leader is up at 88 and a quarter. So, yeah, you can. I wouldn't sell it, Ray, and maybe if you can hold on to it, I think over the next year you'll see it up in the high.
It sounds like maybe you would go to Arista instead.
But Arista is a little more expensive. And so, Cisco actually has a bit of a dividend. Normally we'll trade in Arista, but Cisco, you're not going to get hurt.
Okay. Let's go to the next caller then. Costa's on the line in Montreal. Hi, Costa.
Hi, my friends. I would kindly appreciate your knowledge and wisdom on Constellation Software, CSU. Do you think the bottom is in? Thank you so much. Have a beautiful day.
Okay, Constellation Software, we get calls routinely on it because it's dropped off as much as it has. Mm-hmm. A software company, also a company that acquires other companies. What do you see going on from the moment last year? Obviously, the end of summer is when it started that trend down. It hasn't reversed. What do you think?
You really need 2, maybe 3 earnings to sort of calm the jitters out there. We did own it when it went through that 3,500. We got out of the way. It's impossible to try to catch a falling knife like this. But if you own it, I'd hold on to it. It's actually bounced, I guess. I think the other day it was down around 2250. So, it's come up about 300 points. Maybe this is sort of the level where it'll just sort of consolidate in here. But it's also getting brushed with that whole thing about the software, and, Anthropic came out the other day with their Claude
Legal contracts tool, yes.
Yeah, for the enterprise resource planning side of it. And now you can actually do CRM through Claude and so on. So it's got brushed with that, but so has so many of those other stocks that are involved in the IGV. So,
but you're saying hold on to Constellation Software?
Well, if you've held it this long, I'd put a stop under the most recent low, which I think is around that sort of 2150 to 2200.
Okay.
And if it breaks through there, I'd lighten up.
All right. Let's go to our next caller then. Cardi is on the line in Toronto. Hi, Cardi.
Hi, good afternoon, both. Since I started investing 3 years ago, Meta has been my favorite stock. And just recently after the earnings and when the price went up, I sold off everything, made a good profit. Now that the shares again gone down again, I'm just checking, is it a good time to buy, or do you think there's a further downside potential?
Okay. So let's talk about Meta, which did report, I guess it was last week, and is doing very well with its advertising in social media with AI. Are you still holding Meta? Do you like Meta?
Oh, we love Meta. So currently 677, 12-month price target for the average analyst out there is 805. So, it has a good runway going forward, Cardi. One of the reasons that we really like Meta is that you look at all the other large language models, and they actually sell the data services and the computational power. Meta actually does it for them and their clients, rather than going out and just sort of soliciting anyone. So that's a big differentiator, and allows them to actually use that computational power for their needs rather than clients' needs. So I would definitely pick it up here. You've got about $140 to the price target, which is pretty good. So you can buy it down here, and then probably the next third I'd buy would be around that 635, and then just over 600, 605.
Okay. That was for Cardi. Let's take a quick break. Kim Bolton here to take your questions on technology stocks. We're back in a moment. Welcome back. Demerta is on the line. She's in New Brunswick today with a question. Hi, Demerta.
Hi. I have a question for Kim. It's about Adobe. Does he see meaningful share risk from open source or premium AI design tools over next 12 to 14 months? Thank you. I'll hang up and listen.
Okay. Future of Adobe.
Well, here's another one of these software stocks.
Beaten down software stocks, yes.
They will come back eventually. All of the software stocks are, whether it's Adobe or ServiceNow or Workday or Constellation, they're all talking about how they're going to integrate agents. But then you had Anthropic come out with this thing that, can do all of the enterprise resource planning tools that Adobe actually sells. And so, Demerta, I'd get out of the way. I think it's sort of like what I was saying with Constellation Software. you've got to go through another 2 or 3 earnings periods for things to sort of settle down and see how they are going to react to all this computational power eating their lunch.
So would you get out entirely, or would you step out bit by bit?
Well, what we've been doing is if you go back a year ago, and actually we have some top picks, and we actually thought going into, the end of 2025, 2026, a lot of these software companies were going to do gangbusters with these AI agents. But unfortunately, the large language models actually came out with the agents and said, oh, you don't even have to go to the software companies. So we started getting out. I never like sort of bailing out of something. I like doing it in a third. So if you have a full position, I'd lighten up on about a third. But, what you've seen in the last week, it was only 6-7 trading days ago that the NASDAQ futures were up at 26,300. Now we're down at 24,700. So there's a lot of uncertainty out there, and I don't think you have to rush into this. You will get a chance to sort of return to the scene of the accident, and so don't panic.
Okay, let's get to the next caller. Elliot's on the line. He's in Hamilton, Ontario. Hi, Elliot. Elliot, are you there? Okay, we may have missed Elliot. I'm going to see if we can move on to our next caller. Tony's on the line. He's in Toronto. Hi, Tony.
Hi, Mr. Bolton.
Hello.
You talk about AI versus software company, and Microsoft at this level, will you hold or sell or buy more?
Okay.
Please. Thank you.
Thank you for the question. So Microsoft, again, in the space of software concerns, and released earnings and stock started going down. What do you think about that business model? Because they do have other assets that they've incorporated. They have an AI Copilot tool. So what do you think about Microsoft?
But when you look at like Microsoft, they have so many horses in the race. Yes, they got, brushed with, because if you go back to the Ballmer days, it was all software. And then Nadella came in very, very smartly, recognized the opportunity in the cloud, and he built out Azure. So Azure actually makes a heck of a lot more money than the software side of it now. And then they've done a lot of partnerships. So I guess what I'm saying is that, right now it's trading at 404. Analysts really haven't changed their price targets. Neither have we. The average analyst has a 12-month price target on Microsoft of 600 to 605, and you got $200 that you supposedly could make over the course of a year. So I think this is a great opportunity. The software will still be, a problem, except that they have a lot more horses in that race.
Okay, let's get to Elliot then. He's back on the line in Hamilton. Hi, Elliot.
Good afternoon. Down 30% from its high, Palo Alto Networks has suffered multiple contraction. I suspect a lot of hype has come out of the stock. Is 160, in your mind, fair value, or is this thing going to keep going down? Thank you.
Thank you for the question. 162, where we are today. Kim, what do you think about Palo Alto? That is the same kind of drop-off, more in the fall than at the end of the summer. But what do you think?
Palo Alto is sort of different from like CrowdStrike or Fortinet or even Cloudflare. Those other ones are more geared toward large enterprise. Palo Alto does large, mid, and smaller companies. And it was sort of like the hardware store for everyone to go for cybersecurity. And cybersecurity is a difficult place. We've got out of the way of a lot of this, mainly because it's sort of gone through a lot of support levels, whether it's with Palo Alto or with CrowdStrike or Fortinet. It's just not it's just not the place to be right now.
Okay, so would you pull money out of Palo Alto if you still owned it today?
I'd lighten up, absolutely.
Okay. Let's take a
You know, but sorry, just on top of that, you know, the 12-month price target for the average analyst out there for Palo Alto is $230. So, you know, that's got to be a lift of 35% from here.
Okay, so choose carefully.
Yeah.
We're going to take a quick break. We will go through Kim's past picks when we come back. Time now to go through Kim's past picks from January 29th, 2025, so just over a year ago. Okta on the NASDAQ was the first pick at $94 US, down to $83.64 today, so 11% drop to return 11% total return drop. And we should let people know that a couple of your picks are software stocks that are getting hit. Okta's one.
Yeah, pretty well the whole
Bunch.
Anything in the IGV. But Okta, what they're known for is the authentication.
Security, yes.
Yeah. You know, when you go into your...
Two-factor identification. that kind of thing.
Right.
Okay.
So you go into your bank account, they'll send you numbers. You got to put the number in. Some of them are facial. This is interesting, though, and they're probably a leader in this because of all the AI agents that are coming on. You can imagine that now you have to figure out how you're going to authenticate an AI agent, a machine. Mm-hmm. And so this is a big deal in sort of this whole cybersecurity and certainly the authentication side. They haven't sort of come out with the product. They've talked a lot about it, that they're making progress. They're definitely a leader in this. So if you are a believer that they can actually pull this off to do the authentication of machines, it'll be a big deal. So currently trading right around that sort of 87 level. Average analyst out there is 115 in 12 months as a price target. So I'd actually take like a small position with the expectation that they are going to come out with this authentication of machines.
Okay, let's move on to your next past pick from January of last year. SAP, which was 278.83 at the time, US, and now to 220, so 28% drop, a 27% total return drop. Have you remained invested in this at all?
No.
Okay.
We started to scale out of it sort of back in August, September of 2025. One of our senior research analysts, Alex, is in Israel, and he sort of caught on as he talked with a lot of, the Silicon Valley of Israel, which is in Herzliya, and there is a lot of concern about how this computational power was going to move into the inference stage, the reasoning stage, and then therefore they could actually do some of this enterprise resource planning that, SAP is very in ServiceNow and Workday, they're all known for. And so there's a concern, but I would imagine that they are all feverishly working on it, but they've been put in the penalty box. And so, yeah, we got out of the way of this last fall.
Okay, let's get to your third pick then. Fortinet, FTNT on the NASDAQ at 99.33 US last January, down to 80.49 today, so 19% return and total return drop here. They also do sort of security solutions in the same space. Have you held on to them? What are you doing with this company?
No, begrudgingly, we got out of the way of a lot of the cybersecurity, mainly because of the price action. Like, it's a great story on paper, but then there were more sellers than buyers in the market, and so you just have to respect that. the market is never wrong. We're wrong. So you just have to respect that. And now, Fortinet, to get, they're equal to Cloudflare and to CrowdStrike and so on. They do cybersecurity solutions mainly for larger enterprise, very well known. Interestingly, and one of the reasons that they're probably down a little bit more was that it was summer. They actually got hacked. Here's a cybersecurity company that got hacked.
Never a good look, yes.
And so when that happened, it's sort of like when a company has a lawsuit against them, where there's smoke, there's fire. So we sort of got out of the way of that.
Okay. Let's leave the block here. We will come back with more questions for Kim Bolton of Black Swan Dexteritas. Back in just a moment. Let's go to an email from Brian. He's in Quesnel, BC. He says, good morning. Is this a good time to take a position in open text? Thank you. Open text fallen off quite a bit as well. Is this a company you have had a position in before? Have you invested in open text?
I wouldn't say we've invested in it. We've traded it.
Okay.
Sort of short term, just, when it sort of goes to extremes, usually when it goes lower. But still, even down at this level, it's another software company, and we got to let a couple of quarters sort of pan out. I would imagine that all of these software companies, including OpenText, are feverishly working on getting their agents, their AI agents, integrated into their software to help people actually maneuver through it. Now, they don't do the enterprise resource planning, they do more of the enterprise information management, which is a little less susceptible to the large language models. So I'm surprised that it's actually come down here. I think it's currently sitting in the low 30s. The average analyst, and mind you, most of them are here in Canada, still have a $49 12-month price target on it. So okay. It's sort of enticing.
So you would consider putting money in at the level it is at today?
I wouldn't, no.
Okay. Let's go to the phone lines then. Tanvo is on the line in Calgary today with a question. Hi, Tanvo.
Good morning.
Go ahead.
Thank you for taking my call. I would like to ask your guest on Monday.com. He still have it or he get out of the way?
Okay, so this is a software solutions, again, cloud-based platform. Do you know it? Well,
yeah, absolutely. Okay. And no, we don't own it. These software companies that are used in the cloud, we didn't think that they would be as susceptible to this brush about large language models eating lunch as software companies in the ERP. However, it's become a bit infectious, and I don't think it's actually warranted to be down here. But again, you have to respect the price action that's going on, and let it try to find a floor down at this level.
Why did you think they weren't as vulnerable to what's going on?
Because they're software in a cloud environment, which is a lot different than having a software in a server doing, human resource things or financial reporting. A lot of those ERP software solutions are repetitious, and then that's why the large language models were actually able to come in. Now, for large language models to replicate what software firms are doing in the cloud is a lot more difficult. It means that you have to get rid of the software guy in the cloud, and you have to convince the cloud operator to actually bring in. So, but everything got brushed with the same paint, and that's what happened.
Okay. All right, let's go to another caller. Elizabeth is on the line. She's in Victoria. Hi, Elizabeth.
Hi. My question for Kim is his current thoughts on quantum computing, and particularly the space and the stock.
Okay, thank you for the question. We have quantum computing up right now. Kim, what do you think?
Yeah. So in the space, we own QUBT. We also own Ionic, which is D-Wave, QNX, which is the Montreal, and we're sort of holding around a 4 to 4.5% position across all of these, because you can be sure certainly within 3 years, quantum computing is going to be all we're going to be talking about.
Because?
Because it's sort of like the large language models. They were able to do something that we, on the computational level, that we couldn't do before. Now, when quantum computing come along, traditional computing is zeros and ones, but quantum computing actually has these qubits in between the zeros and ones, so you can, it's not that it does it faster, it just has more computational power. And if you can have more computational power, then you can do more, and it will definitely change everything, not just in the computational computing, but even, for example, in cybersecurity.
So would you pick it up where it's at today? I know you said you already own similar stocks.
Yep.
But you picked this one up.
I'd pick up QUBT, I'd pick up QNX and Ionic and D-Wave. There's another one, Rigetti. But I think I'd, in a portfolio, at least what we do, we hold, around 4% amongst these names.
Okay.
In total.
All right. Let's take another quick break. Your phone calls when we come back. Stay tuned. Welcome back to Market Call. We have Vic on the line. He's in Kingston, Ontario. He has a question today for Kim. Hi, Vic. Vic, are you there?
Yes, I'm here.
Go ahead.
Yeah, I was talking with Kim there a couple of weeks ago, 3 or 4 weeks ago, regarding Quantum Emotion Corporation. They're in the security side of the quantum computing, and I was wondering if he could give me his thoughts on it, whether it's a good time to buy into it now or still hold or what.
Okay, thank you for the question. We've got the chart for Quantum Emotion coming up in just a moment. What do you think about the company? What do they do exactly?
So their intellectual property is actually, it's a Montreal-based firm. And the CEO, he'll kill me. But then they work very, very closely with the likes of Sherbrooke, the University of Sherbrooke. And so they're...
This is Mark Rousseau?
Yes.
Okay.
And so people can either do the quantum computing using electrons, photons, or maybe a combination of both. QNX, Quantum Motion, does it with electrons, but then they recognize that the cybersecurity side of things is going to be a big deal, because you're going to have to change the clothes that you've normally worn for cybersecurity in sort of the traditional side, and then you have to do something completely different on the quantum computing side. So most recently, they sort of popped, Vic, they sort of popped probably a good 20% because there was a release that they were actually going to get listed on the NASDAQ. So we started following this company, oh my gosh. And it was actually one of your callers that brought it
I
to
remember this, yes.
and we were talking about it then when it was 45 cents.
Yeah, it was 44 cents back in February of last year.
Yeah. And now it's up at like 5.5.
Yeah, 438 or something.
438.
Okay.
So
would you hold it at this point if you were?
Yes, absolutely.
You think there's room to grow?
Yes.
Okay. Let's go to John. John's in Winnipeg. He's got a question. Hi, John.
Hi. Beautiful day in Winnipeg. It's 0 degrees and it might rain today.
Well, it's cold here, let me tell you. Yeah. What's your question?
Okay. It's an AI question. You touched upon it. Are you looking at the big banks because you think that AI is going to give them an advantage? And who's doing it for them? Like, are they doing this all in house, or are they bringing in a consultant like Google with their models? Because these consultants like CRM are just being trashed. They're down like 44% over the last year.
Okay, so that's a good question, right? I think a lot of the financials are set to benefit from backroom AI efficiency. But good question about who are they using to trot this out in the U.S.?
Yeah, it's a great question, John. And boy, 0 degrees in Winnipeg, that's like a heat wave.
That's balmy, yes.
So what we originally did back last fall when we sort of saw this transition of going from like an infrastructure technology story to more of like an end user and earnings story,
yes.
right? So what we did last fall while we were trying to figure out which of the individual financial stocks that we wanted to buy, we bought that XLF, the ETF down in the States. And it did very well. But then more recently, we've got in with Bank of America, JP Morgan. We've weighed back in to Visa because they've actually embraced, Visa and MasterCard have actually embraced AI on the fraud side of things. Originally, the AI side was meant to be able to do it quicker and faster and cheaper for repetitive jobs. But now that you have the inference coming along and the reasoning, they can actually come in to the banks, get all the data, and actually come back and tell you where there are some inefficiencies around the company.
It can do the consulting work for you.
Exactly.
Okay.
Exactly.
But is it clear who is providing the product for them? I think the question is who's benefiting? Is it Google that's benefiting from AI rollout for the banks? Do we know that yet?
Yes. To get to the banks, they have to have a relationship with large language model guys, like with Amazon or Google, which is the preferred these days, or even with Meta. But then in the past, you would go to the application guys, but now you can bypass that because of the inference and reasoning side. So the large language models can take it directly to the banks, to the enterprises, which is it's quite interesting. Yeah.
All right. We do have to take another quick break. We will come back with new picks from Kim in just a moment. Join us tomorrow for Market Call. Lawrence Steinberg with us on the show. He is president, Lawrence Steinberg Wealth Management. He'll take your questions on global value stocks and high-yield bonds. Time now for new top picks from Kim Bolton. We're going to start with Trane Technologies, TT, on the New York Stock Exchange. This is essentially HVAC company?
Yeah.
And why do you like them?
So for all three of these, this is all about where we're taking a little bit of money out of the infrastructure build-out that you've had over the last few years with the Amazons and the Googles and so on, and actually they're selling their models to enterprises. And the one that we really like is Trane. So Trane is on the HVAC side. So what are they doing on artificial intelligence? So they have this autonomous building control, and they actually bought a company over in Montreal to Brain, and it had a software called Area, and so and it's geared specifically to heating and air conditioning and that whole industry. And so they actually bought this company, and it has a generative AI for building management. And so everything can sort of be put on cruise control, but it also has a lot of predictive maintenance, sort of like digital twins,
yes.
right?
Okay. They can tell when something needs to be repaired or checked up.
Exactly.
Okay.
Exactly.
All right. Let's get to Caterpillar, well-known name. You like Caterpillar as a same part of the system. Are they using AI, CAT, on the New York Stock Exchange?
You know, I would say sort of Caterpillar and Walmart have been using AI the most and for the longest. And so currently trading right around that sort of 680 level. We have a 12-month price target of 750. So you buy a third here, you buy another third sort of down around that 645 and maybe down around 605.
How does Caterpillar use AI? I know that Walmart uses it for sort of supply and oversight for supply. How does Caterpillar use it?
So, as you can imagine, Caterpillar has a lot of autonomous and semi-autonomous machines, right? They don't have to have drivers. Everything's sort of coded in. But for those machines that actually have drivers, they just launched at the CES Expo in Vegas back at the beginning of January, the Cat AI Assistant. And so everything is censored around through the machinery, and it's sort of like your friend and your coach in the cab.
Okay.
Again, you know, the predictive side of things, and also for the supply chain. Yeah.
All right. Let's get to your next pick, Eaton Core, ETN, out of New York. And this is a power management company, so similar theme.
Yep. And let's see, currently trading right around that sort of 360 level. Not as much runway in here because the average 12-month price target is sitting sort of around that 395 to 400. So you could buy a third here, but you know, you buy another third down sort of around 330, and then if you can get another third down around 300. So it's all in sort of power management, but especially on the electrical side. Sort of flies under the radar, sort of like Caterpillar and also like Trane. They have a huge backlog behind it. So on the generative AI for Eaton, they use AI for product design. They have this thing called a Bright Layer Suite, which is for intelligent power management, which you can imagine is a big deal for all this build out within data centers. And then there's a lot of activities that are repetitious that you can actually bring in AI to do it without having to pay people to actually do it.
Okay.
So, yeah.
There we go. That was Eaton Core ETN, if you're looking for that. Got to leave it there, Kim. Thank you so much for coming in. Good to see you.
Thanks, Marilla.
And thank you for joining us today on Market Call. We'll see you back here again tomorrow.